After announcing fantastic Q3 earnings results on November 10th, SOFI stock soared the next day. The stock price remained in the same price levels for the next few days, but then it fell again on November 16th after SOFI announced on November 15th that significant investors of SOFI were selling their shares. As of today on November 22nd, SOFI stock is down another 8% on news of another inside sale. Today, we'll catch up on the news that made the stock price fall and other news updates about SOFI. We'll also follow up on Analyst Consensus and any re-ratings that occurred in the last week since the Q3 earnings report. SOFI stock fell almost 12% after SOFI announced on November 15th of a secondary offering of significant investors of SOFI selling their common stock. The secondary offering happens when significant shareholders want to sell their shares and use the cash to invest somewhere else. The shares that are sold will not change SOFI's total number of shares outstanding, but it could increase free-floating shares, which is actually a good thing for common investors, since it provides a little more liquidity in terms of buying and selling shares. From this secondary offering, SOFI also does not receive any money from the sale of the shares because these shares are bought by other investors. According to SOFI's news release, these shares will be sold from time to time in one or more transactions on NASDAQ, in the over-the-counter market, through negotiated transactions, at market prices at the time or negotiated prices. The shareholders who are selling the 50 million shares include SoftBank, Silver Lake Partners, Qatar Investments Authority, Red Crow Capital, and Cha-Cha-Cha SPAC 5. They're selling 50 million shares of SOFI, which is about 6.9% of SOFI's outstanding shares. But it's important to understand that even though 6.9% of shares are being sold by significant early investors, these investors will still hold a large position of SOFI. According to SOFI's secondary offering prospectus, altogether the shareholders owned 39.8% of SOFI before the secondary offering, and after the secondary offering, the position will drop to 32.9%, which is still a large stake in SOFI. None of these shareholders are getting rid of all of their SOFI stock. For example, SoftBank is selling 22.5 million of the 50 million shares in the secondary offering, but this is only 19.1% of their prior position of 117.795 million shares. This means they'll still have 11.8% of the company's shares after the sale. And after the sale, Silver Lake Partners will go from 4.9% to 3.9% stake of SOFI. On November 22nd, the stock fell another 8% at the time of the creation of this video, after news of a significant insider sale executed on November 18th. The insider is Thomas Clayton Wilkes, Director and Vice Chairman of Galileo, who sold roughly 10 million shares of SOFI, worth about $217.65 million, on November 18th. Wilkes still maintains a significant position in SOFI. Wilkes sold approximately 19% of his shares of SOFI, and based on 799 million shares outstanding, according to the SEC Form 4 filing of insider trading, Wilkes owns 42.6 million shares after the sale. This indicates that Wilkes' stake in SOFI before the sale was 6.6%, and after the sale, Wilkes still owns 5.3% of SOFI. Also on November 18th, billionaire investor and original SPAC sponsor of SOFI, Chamath Palihapitiya, announced that he decided to sell 15% of his portfolio's stake in SOFI shares. He said in his statement, and I quote, "There are still areas of the market that are ripe for opportunity. Amazing things are happening in climate science, life sciences, and alternative finance. And it's clear that the world needs these solutions now more than ever. So what do? Sell down? Invest more? Reallocate risk from public to private markets? To that end, I decided to sell about 15% of our stake in SOFI to build up some cash reserves and fund several new investments in Mitra Chem, next-gen battery production in the US, Spectral, FICO Score for Web3, and Syndica, AWS for Web3. We also expect to increase our public investment in Clover Health through their primary offering. We remain a significant investor in SOFI, retaining about 85% of our original stake, and are excited about their path ahead. The secondary offering to sell shares by the original investors could also be due to similar reasons as Chamath Palihapitiya explained. All these investors still hold a significant position in SOFI. The reason they're selling could be because they have seen a big profit up until now, and they want to reinvest some of these funds into other opportunities. But they are not selling all their shares because, as Chamath Palihapitiya also said, they're most likely still excited about SOFI's path ahead with the bank charter and becoming a common household name as a one-stop shop for managing finances and banking needs. On November 4th, SOFI announced redemption of all outstanding warrants. And as we explained in our episode 34 video on SOFI, we will see slight dilution from the redemption. On November 19th, SOFI announced that the redemption fair market value of the warrants is $22.38. As a result, holders who exercise their warrants on a cashless basis will be entitled to receive 0.361 shares of common stock per warrant. Any warrants that remain unexercised following December 6, 2021 will be void and no longer exercisable. So we should see all of the warrants fully diluted by December 6th and no longer impact the shares outstanding after that day. A week after the Q3 earnings report, the Analyst Consensus target price still remains at above current price levels. From 7 institutional analysts, the average target price is $25.71 as of November 22, 2021. Does that mean the current dip is a buy opportunity? Many investors were regretful that they didn't buy the SOFI stock just before they announced their Q3 earnings report because we saw a huge surge in their stock price due to their great results. However, after the announcement of the original investors selling their stake in SOFI, SOFI's price level is back down to its levels in the low 20s before the rally in November. Objectively, the company's performance, portfolio of products and solutions, and member growth is still the same now compared to a week ago when they announced their Q3 results. And as explained earlier, the sale of shares by the original shareholders does not represent all of their holdings. To add to that, SOFI's popularity has been growing as can be seen in the app downloads. As of this week, SOFI is number 7 in downloads under the finance category in the Apple App Store. The fact that SOFI is in the top 10 downloads is a great sign, especially before it has even become a bank. SOFI is ranked 31 in Google Play's finance downloads. As we explained in our FinTech industry episode, the consumer trend in digital banking is to use one bank for all their needs, including saving, investing, mortgage, lending, and more. So we will have to continue to monitor SOFI's popularity and familiarity among users. To reiterate, we have not seen any negative news on the company's products or their management or on their performance. So fundamentally, our thoughts on SOFI's growth forecast in the next year should not change. The secondary offering could indicate many reasons, but similar to Chamath Palihapitiya's reason for selling, the original investors could be selling in order to free up their funds to reallocate their portfolio. Also, the slight dilution from the warrants redemption should all be complete by December 6th. We have also not seen any downgrades or re-ratings by analysts in the week after the Q3 earnings results, and the average analyst consensus target price remains in the $25 to $26 range. With these new updates this past week, the dip could be seen as an opportunity for many investors, but this is not financial or stock advice. It is merely our interpretation of what happened in the last week, so you should do your own research before making any decisions. Investors are still eagerly waiting for the bank charter and continued growth into 2022. But as we outlined in episode 31 about SOFI's key risks, the bank charter not being approved is still a huge risk. But SOFI CEO Anthony Noto said in the Q3 earnings call on November 10th that they are still looking forward to finishing the last mile, which means they have not gotten any indication from the authorities about a possible rejection. But we'll still have to see. Thank you for watching.